G'day everybody, welcome to the weekly general update for the weekend of the 3rd and 4th of March. And we've had another really intriguing week, and I still think we're setting up for a strong run through till probably late April or May and possibly beyond. So let's get stuck into it. Just a reminder about the general advice nature of this information and the licensing information as well. So let's do a quick summary of the action for last week. Now the S&P gained 4 points again on the week, the same as it did the week before, but as we'll see when we go through the charts that it is starting to look like it's losing momentum. But we are still getting mixed signals, and I want to take a look at those mixed signals, some of them positive and some of them negative. There are also so many contrarian sentiment indicators that are screaming atop, and this has been the case now for 5 or 6 weeks, and it's just amazing that the market can continue to advance in the way that it does when there are just so many extremes that would normally mark tops in the market. I want to have a look at the Dow Jones Transportation Index, which is a leading indicator of the US stock market. Very regularly it'll be the first sector to turn down, and it did that about 3 weeks ago. I want to take a look at the banking index as well, because obviously that's an important determinant of the US stock market. I want to have a look at Caterpillar, which is the world's leading indicator of resource activity, because they're providing heavy earth moving equipment and all of those very front end things, and the share price of Caterpillar has been very strong. And I also want to take another look at the share price of Apple as well, being the largest company by market value in the world. Now, just looking at the whole situation, whilst we are desperately overbought and really desperately in need of a pullback, the fact that there's been so much strength against all these contrarian indicators for so long really does bode well once we can get a bit of a mild correction out of the way. And I really think the odds have shifted massively in favour of the market moving higher after a little correction. And I've got an initial medium-term target of 1440. And it's not beyond the realms of possibility that the S&P could move back to its all-time highs around 1550. Now the ASX index lost 33 points on the week, so again we've slipped back into incredibly substandard performance compared to the US. The energy sector was still a standout, but there are certainly some signs that oil may pull back, and that's not at all surprising because it's been on an absolute tear over the last 4 or 5 weeks. So we'll have a look at that as well. And the oil and gas small cap stocks are really going brilliantly. Members have had some fantastic trades in that area, but gold is really still yet to click into gear, and I think we're still yet to see the big catch up in gold stocks compared to the price of gold. So I think that's still a really good area to be looking at. Now gold had a huge fall during the week, as I'm sure everyone's aware, down $90 odd in the space of just a couple of hours, which as I've written in the members' reports was plain and simple price manipulation. The big guys who have got a vested interest in not seeing the price of gold continue to rise. And in the end gold recovered a bit, but we were still down $61 on the week. Now that manipulation, which happens maybe a couple of times a year it seems these days, now that that's out of the way and the objective has probably been obtained, and that was to take some of the air out of the tyres of the gold and silver market, I would expect that the normal crowd behavioural patterns will come into play, and I'm looking for a 3-wave decline over the next few days, few weeks, and then what will probably prove to be the most powerful leg higher will start. So I think we're now getting into the real sweet spot with gold and silver. We'll have a look at the gold miners index in the States, the GDX and the GDXJ, which is for the junior gold miners. That also turned over and went down again last week. Now silver finished down just 60 cents despite a real huge fall on Wednesday night with gold, but the reason it was only down 60 cents was because it had had such a stunning run up in the 2 or 3 days before that. It had broken out above $35 and shot up to nearly 38. Now after this bases out, so I'm expecting a similar pattern to the downside on silver. I'm then looking for a run back towards $40 on silver. Now, is oil turning over? It's a bit too early to say, but the signs are there that we might get a week or two down in oil, which will just give us some great setups for some good oil stocks. Copper again held steady, which is a really positive sign for the global economy, particularly with oil heading higher as well. And it just continues to hold just a touch under $4 a pound, which is a very buoyant level and makes most copper producers very profitable. And as I indicated before, Caterpillar is really the leading indicator there. It's formed a double top, as we'll see, and so a mild pullback would be pretty normal. So let's go and have a look at the charts now, and we'll start with the S&P, and this is it on a daily chart. You can see we've had as we've been looking at for a while, we've had a stunning run from the lows in October, and really since the middle of December it's really just gone straight up. It's been quite amazing, and that is purely and simply a result of the European Central Bank, the ECB, basically coming out with their money printing in drag, because what that did was it removed any fear from the market that the European financial system was going to collapse. And that's almost to the day. I forget the exact day the ECB did that, but it was around about the middle of December, and you can see 19th and 20th was the bottom, and since then it's just gone straight up. Now it's been desperately overbought for a number of weeks, and it's just looking to me like the momentum is just starting to wane a little bit there. Now let's have a look at some of the other internal parts of the US stock market, and this is the Dow Jones Transportation Average, and you can see that we've had 3 weeks down. We've pulled back to the moving averages now. The MACD has rolled over, so the indications are that that this could be the start of this correction. However, it's just come back now to this peak that was formed in October. So I'd really like to see a more definite close below that peak. So I think once it closes below that peak, which is about 90, then I think we can feel a bit more comfortable that we're going to get a bit more downside in that transportation index. Next, this is Caterpillar on a weekly chart. You can see formed a double top at the all-time highs around $115. It is just pausing a little bit, but look, that's perfectly normal. So a pullback to maybe 105 to 108 would be perfectly acceptable, and then have another crack at breaking out above 115. And if and when the price of Caterpillar does break above 115, then I think you're going to see a flurry of activity in the resource space. Now the next one is the American Banking Index, and this is it on a weekly chart. There's not a lot of history here, but you can see that we're just starting to run out of momentum. The trend upwards is still strong, but the last couple of weeks, you can see the week before last we closed on the lows. This week it had a crack at moving higher but closed off its highs, and the MACD has clearly lost momentum in the last couple of weeks. So the banking index in the States is at a position where it could take a breather and pull back to these moving averages. And finally, as far as the US goes, just have a look at Apple, and this is Apple on a daily basis. We'll just take a look weekly, and you can see it's looked like it was rolling over on a daily chart, but it's just really got another second wind and it's just roared off again. So Apple looking incredibly strong. So there's a real positive for the US stock market. Now the other potential negative is with the US dollar index, and normally the US dollar index would go in the opposite direction to stocks. Now the US dollar index has been falling. It's pulled back to the 150-day moving average, and my reading of it was that it was back into downtrend, which is a positive for stocks. Now that has turned around, as you can see, in the last 3 days, and we're currently now getting a bounce. Now, is this just a bounce off the 150-day, or is this a reversal? If it is a reversal, then we will get a correction in the US stock market, no question. So we need to watch this US dollar index quite closely as well, so that the jury's still out on that one to a degree. Now the other positive, this is the Shanghai Composite Index in China, and you can see we've now had about 7 or 8 weeks of very positive trading, and momentum indicators still heading up, so there's still plenty of scope for this to move higher. So you know, when I just smile when I read some of these reports of the fear merchants who are talking about a collapse in the Chinese property market. I can assure you that if the Chinese property market was going to collapse, that we would not have had 7 or 8 weeks of consistent gain in the Shanghai index. It's quite absurd. So if you're reading any of those stories about China's going to fall over, just take a look at this index chart and remind yourself about what's really going on. Now let's have a look at the gold chart, and I'll look at it on a weekly basis. Sorry, this is a silver chart, so we'll look at that one first. Now there is an error here. This red candle on Thursday is in error, so just ignore that. So you can see here we've had a really good trend. It's following the moving averages. We've pulled back to the moving averages, and what I am expecting is a 3-wave pattern to the downside. So we've perhaps had just do that again. So this could have been the first leg down, first little bit of the leg. We then could get a little bit of a bounce, and then if we get the third leg down to maybe either 33 or 31.80, they're the target levels. So if that's how it played out, that would be just about perfect and would set us up then for an assault on $40. So my target areas on silver are 33, so roughly 33.10 and 31.80. Now let's take a look at gold, and this is gold on a weekly chart. So you can see, whilst there was a huge move, as we'll see on the dailies on Wednesday, when you look at it on a weekly chart, it really wasn't all that significant. So again, this candle on Thursday is a data error, so just ignore that one. So again, I'm looking for perhaps a three-wave pattern to the bottom of this little consolidation. So it could look something like this. So the levels that I'm looking for, we've got a level at 1689, which we've already touched, so it's possible that that's the bottom. But I think it was such a big fall on Wednesday night. I really am looking at 1650, 1659. So let's call it 1660 is the area that I'm looking at on gold, and then again that will then set us up for a pretty strong run higher. Now just a final couple of charts. We'll have a look at the gold miners index. This is the GDX on a weekly chart. You can see we did finish down last week, but largely it's just moving sideways. And with the juniors, again, let's look on a weekly chart. It's really just gone into a bit of a sideways consolidation pattern. So the gold stock's really not yet following where the gold price is going, but they will. And the final chart I want to take a look at is the chart of oil. So we've got this is light sweet crude, and on a weekly chart, and you can see we had a great run from about 96, got up to 110, and a little bit of a reversal perhaps. occurred last week, and we'll also have a look at Brent crude, which also really had a very strong run. So this is the Brent crude, which is North Sea. So we've formed a double top up here now, and may get a bit of a pullback in oil, but I think that would just set up some great trades in the oil and gas space. So that's it for this weekend, and we'll talk again next weekend. Cheers.
If you want to trade and invest with us with a big edge on the market, go to our website, specialistshareeducation.com.au. You can access our free video series on creating trading cash flow and smart investing. Plus, you may also register for our weekly Ask the Expert webinar.